preparing for asset management operations at Fidelity, Invesco, and Franklin Templeton India interview. You've reached Candy Mentor, and this video is for you. We'll walk through 12 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through the trade lifecycle in an asset management operations role. The interviewer wants to assess your end-to-end understanding of how investment decisions become settled, recorded transactions, and whether you can connect front office activity with custody, accounting, reconciliation, and NAV impact. While answering, focus on order placement, compliance checks, execution, confirmation, settlement, accounting entries, custody updates, cash movement, and how operations prevents trade breaks from affecting fund valuation. In asset management, the trade lifecycle starts when the portfolio manager decides to buy or sell a security. The order moves through compliance checks, execution, trade capture, confirmation, matching, settlement, accounting, and reconciliation. Operations ensures the trade is complete, accurate, funded, and reflected in the fund's books before NAV. For example, if an equity trade settles T+1, cash and custody positions must match on settlement date. Question 2. How is NAV calculated, and what are the key operational controls around it? The interviewer is testing your understanding of mutual fund valuation mechanics, daily NAV production, pricing controls, accruals, liabilities, unit capital, and the operational risks that can cause investor-impacting errors. Make sure to cover asset valuation, accrued income, expenses, liabilities, units outstanding, security pricing, trade and cash validation, corporate actions, maker-checker review, and escalation of material exceptions. NAV is the per-unit value of a mutual fund scheme. I calculate it by taking market value of investments plus accrued income and receivables, less liabilities, expenses, and payables, then dividing by units outstanding. In operations, the focus is not just the formula. It is validating prices, corporate actions, cash, trades, and accruals. A small pricing or unit capital error can directly affect investor dealing and regulatory reporting. Question 3. What is the difference between front office, middle office, and back office in an AMC? This question evaluates whether you understand role segregation inside asset managers like Fidelity, Invesco, and Franklin Templeton, especially how investment, risk, trade support, settlement, and accounting functions interact. In your answer, talk about portfolio management, trading, compliance monitoring, performance and risk support, confirmations, settlements, reconciliations, fund accounting, and why segregation supports controls and accountability. I view front office as decision-making, middle office as risk and trade support, and back office as settlement, accounting, and record accuracy. In an AMC, portfolio managers place orders, middle office validates compliance and allocations, and operations ensures confirmations, custody settlement, cash movement, and NAV inputs are correct. The teams are separate for control reasons, but the handoffs must be tight, because one missed trade can create NAV and client reporting issues. Question 4. How does the subscription and redemption process work for Indian mutual funds? The interviewer wants to assess your knowledge of investor transaction processing in India, including RTAs, cutoff rules, KYC validation, payment realization, unit allotment, redemption payouts, and NAV applicability. Be sure to mention order receipt channels, CAMS or KFIN, cutoff timing, payment confirmation, KYC checks, applicable NAV, unit creation or cancellation, bank reconciliation, and regulatory payout timelines. For Indian mutual funds, Investor orders normally come through platforms, distributors, branches, or RTAs, such as CAMs or KFIN. Operations validates cutoff timing, KYC, payment realization, scheme eligibility, and applicable NAV. For purchases, units are allotted after money is available as per rules. For redemptions, units are reduced and proceeds are paid within regulatory timelines. The key is accurate unit capital, bank reconciliation, and exception handling before NAV finalization. Question 5. If a trade does not settle as expected, how would you investigate the issue? The interviewer is testing your practical break resolution skills, ability to diagnose settlement failures, coordinate with brokers and custodians, prioritize risk, document actions, and protect cash, positions, and NAV accuracy. While answering, focus on comparing internal trade records, broker confirmations, custodian data, settlement instructions, cash availability, security quantity, escalation protocols, aging, ownership, and same-day resolution discipline. I would first identify whether the break is due to quantity, price, counterparty, settlement date, bank cash, or custody posting. Then I would check trade blotter, broker confirmation, custodian records, exchange settlement data, and accounting entries. If it affects settlement risk, I would escalate immediately to trading, custodian, and broker, while documenting ownership and expected resolution. The goal is to prevent failed settlement and protect NAV accuracy. Question 6. Which daily reconciliations are most important in asset management operations? This question evaluates your understanding of core operational controls, especially how cash, position, trade, unit capital, bank, expense, and corporate action reconciliations support accurate NAV and client reporting. Make sure to cover reconciliation sources, such as internal books, custodians, brokers, fund accountants, RTAs, and banks, plus break aging, materiality, escalation, root cause analysis, and audit trail. Daily reconciliations are the control backbone of asset operations. I would reconcile cash, securities holdings, trades, corporate actions, unit capital, expenses, and bank accounts between internal books, custodian, fund accountant, RTA, and broker records. Breaks should be aged, explained, owned, and escalated based on materiality. A clean reconciliation process gives confidence that NAV, client statements, and regulatory reports are based on complete and accurate data. Question 7. How do corporate actions affect fund operations and NAV? The interviewer wants to assess your ability to process dividends, bonuses, splits, mergers, rights issues, and other events correctly, while understanding their impact on holdings, income, receivables, pricing, and NAV. In your answer, talk about announcement capture, ex-date, record date, entitlement calculation, custodian confirmation, tax treatment, accounting entries, position adjustments, income accruals, and reconciliation of proceeds. Corporate actions matter because they change holdings, cash, income, or cost basis without a normal trade. For a dividend, operations must capture the ex-date, record date, entitlement, tax impact, receivable, and cash receipt. For splits or bonuses, quantity and price need adjustment so market value remains sensible. If the event is missed or posted late, positions, income accruals, and NAV can all be materially wrong. Question 8. How would you manage cash forecasting for a mutual fund scheme? The interviewer is testing your understanding of liquidity operations, cash availability, settlement funding, redemption planning, income receipts, expense payments, and coordination with portfolio managers to avoid overdrafts or failed settlements. Be sure to mention subscriptions, redemptions, trade settlements, coupons, dividends, expenses, margin needs, bank balances, expected cash flows, market settlement cycles, and timely communication with investment teams. Cash management protects the fund from overdrafts, failed trades, and inefficient idle balances. I would track opening cash, expected subscriptions and redemptions, trade settlements, coupon or dividend receipts, expenses, and margin or collateral needs. In India, equity settlement timelines make forecasting especially important. If a large redemption is due, operations must coordinate with portfolio management so liquidity is available without forcing disorderly sales or borrowing. Question 9. What KYC and AML checks are important in Indian asset management operations? The interviewer wants to assess your awareness of investor onboarding controls, SCBI and AML expectations, documentation requirements, sanction screening, suspicious transaction escalation, and operational accountability in a regulated AMC environment. While answering, focus on PAN, address proof, bank verification, FATCA, CRS, beneficial ownership, politically exposed persons, sanction screening, risk classification, transaction monitoring, and escalation of suspicious activity. KYC and AML controls ensure the AMC is not onboarding prohibited, suspicious, or inadequately identified investors. I would check PAN, address, bank proof, FATCA and CRS declarations, beneficial ownership, sanction screening, and risk classification. For unusual patterns, such as frequent small transactions or third-party payments, operations should escalate under the AML policy. Strong controls protect investors, the AMC, and regulatory standing during audits, reviews, and inspections. Question 10. How are fund expenses accrued, and why does TER monitoring matter? This question evaluates your understanding of expense accounting in mutual funds, including accrual concepts, scheme-level charges, SEBI total expense ratio limits, NAV impact, and controls over fee calculations. Make sure to cover daily accruals, investment management fees, custodian and RTA charges, audit fees, taxes, expense caps, scheme documents, TER limits, review controls, and NAV sensitivity. Expense accruals spread fund costs into NAV on the correct days rather than only when invoices are paid. I would accrue investment management fees, custodian charges, registrar fees, audit costs, transaction expenses, and taxes based on approved rates and scheme documents. TER limits and expense ratios must be monitored closely under SEBI rules. If accruals are wrong, performance, investor returns, and AMC revenue recognition can be misstated. Question 11. How do you handle high-volume operations while meeting SLAs and maintaining accuracy? The interviewer is testing your operational discipline, prioritization, process control mindset, ability to manage time-sensitive cues, maintain quality under pressure, and communicate risks before they become breaches. In your answer, talk about SLA dashboards, queue prioritization, maker-checker controls, exception-based processing, aged items, escalation, capacity planning, root cause tracking, and balancing speed with accuracy. In high-volume operations, I rely on prioritization, maker-checker controls, dashboards, and exception-based review. First, I separate NAV-critical, settlement-critical, and client-impacting items from routine processing. Then I monitor SLA queues, aged breaks, pending approvals, and upstream data issues. If volume spikes near month-end or market events, I would communicate capacity risks early and reallocate effort. Speed matters, but accuracy and audit trail matter more in operations. Question 12. Give an example of how you would improve a recurring reconciliation break process. The interviewer wants to assess your process improvement mindset, data analysis skills, control awareness, and ability to reduce manual effort without weakening governance, documentation, approvals, or exception management. Be sure to mention break trend analysis, root cause identification, upstream data quality, automation rules, tolerance limits, exception dashboards, control approvals, testing, documentation, and measurable benefits. I would start by measuring the break population, not jumping straight to automation. For example, if most reconciliation breaks come from late custodian files or inconsistent security identifiers, the fix may be upstream data standardization. Then, I would automate matching rules, introduce tolerances, and build exception dashboards. The improvement should reduce manual touchpoints, shorten NAV close time, and preserve control through approvals, logs, and periodic rule reviews. If you are still with us, congratulations! You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.